So the bottom line is everything changed. And when I say changed, it all comes down to the Federal Reserve. So the Federal Reserve went from a body that was printing. The government was printing. And all of a sudden, we're not getting any new stimulus, no new kind of build back better plans in the government. That's not going to pass. And the Federal Reserve reducing their balance sheet, raising interest rates, stopping QE. And it's basically putting a hard ceiling on the market. The market has no place to go but down to kind of unwind what we've been seeing. So this is kind of why in December, when I talked about how gold would be the best performer in 2022. And so far it has been as we approach getting closer to the midpoint in the year. But bottom line is, this market will have major bounces. The great thing about a market that's not backstopped by the Fed is that there's volatility. So for swing traders and day traders, this is the best market in the world. For investors who are long-term, it's going to be a tough market. There's a lot more downside to go. Yeah, so I think the worst case for the market would be if the Fed came out at a 10, meaning just as hawkish, as amazingly harsh and hawkish as they've been. And they basically said, hey, listen, no matter what the economy does, no matter what the stock market does, we are going to continue to rip rates higher 8 times this year or so. That would freak the markets out. Because again, what the market's concerned about here is that the Fed is slowing the economy. The supply side of things is causing price inflation, which is slowing the economy. Oil prices are high, that's slowing the economy. And the market wants to know that if the economy slows substantially, the Fed will back off a little bit. So if the Fed does not say anything like that, that will scare the markets. If the Fed gives us just that inkling, that little tiny crack in the wall that says, hey, listen, we would potentially back off from 8 rate hikes to 4 or 6 or 5, that would be something that the market would say, all right, the Fed is still around. They're still here to help us just in case. Yes, they have to fight inflation, which is important, but they're not totally leaving us for good. The stock market is still way above the pre-COVID highs. The inflation issues are just we're just not seeing inflation coming down right now in any metric. And that is going to make the Fed probably be very, very hawkish and continue to be hawkish if they can give just a small if they can throw a bone to the market, if you will, by saying, hey, listen, don't worry, guys. If it gets too crazy, if the economy goes into a steep recession, we will back off. Then the markets start to rally and tech could rally. And by the way, the 10-year is bubbling up against 3% today. I do think you are going to get a pullback off this 3% level. In fact, I've been buying the TLT, which is kind of an inverse play where if rates come back down a little bit in a short-term trade, and this is only a swing trade, TLT would bounce. So I've been accumulating the TLT.
In order for the Fed to pull back or scale back their tightening, we need signs of a recession. I guess great for traders who are long, but that's really not, great news overall for the American people.
And I want to reiterate that. That's what's so scary about this scenario is that, yes, that would give a slight positive to the markets in the near term. But after a bounce, investors would start to say, okay, but now a recession, maybe the Fed is a little bit looser and more slightly less hawkish, but now you're going to see a recession cause a slowdown in earnings growth that could get worse and worse. And then that's going to be a pressure on the stock market and these valuations in these stocks. So this is really potentially going to be one of the nastiest storms we have seen in the market, where again, I think that you're looking at the NASDAQ potentially being down 40 to 50% over the next 12 months from the highs of last year. I think right now we're down about 22, 23%.
Right.
So I think you go down about 40 to 50% at least within the next 12 months. So it is not going to be a pretty thing. And you're already seeing the cracks, right? I mean, we've seen Facebook collapse. We've seen Netflix collapse. Apple's still holding on, but notice how Apple's earnings were amazing and the stock is still selling off. Notice how Tesla's earnings were amazing and Tesla still ended up selling off after that initial pop on earnings. Those are the signs that tell you big money is exiting from these big names, and it's just the start. And because those names make up such massive percentages of the indexes, that alone can take down the markets. I mean, you could have some of these beaten down plays that are down 90%, hold steady even, probably go down a little, but just those big cap names can take the NASDAQ 100 down another 20%. I have been accumulating silver on the long side in this lower range here. We've now come back in to basically retest the breakout. You have this upsloping trend line kind of coming right into here. Look at all these red candles on silver. So silver is primed for a bounce. What I love about silver today is that early in the day it was down sharply, and it's now coming back not too far from the flat line. So again, way oversold near term, right back to what I would call the retrace where we were consolidating here. I think silver is going to start to take off. And gold, I think the last time we talked, I said I was waiting to buy gold till it got back to about 1850 on spot gold. Well, if we take a look at gold today, it finally did dip. The low today was right around 1850. It's now in my buy range, right in this 1850 to 1825 range. And these are the retraces that as a metals investor that I've been waiting for. So again, I am in silver. I haven't picked up any gold yet, but I'm looking to buy gold if it dips just a little bit more as well. If it doesn't hit and it starts to trade up, that's just a bullish sign. I mean, there's just so much buying pressure on gold that if it doesn't come down and go in this area just a little below 1850, which is my buy zone, then yeah, it would just tell you that people are just, they can't even wait for the levels. Even big money is rushing in. So in general, levels will hit, but occasionally they do miss by a hair. And that's just the nature of the buying volume that comes in. So yeah, it's always possible. Ultimately, I think gold is going to go way, way higher. I'm talking more on a swing trade. Now, to be clear, I do own a lot of physical gold and a lot of physical silver. I always hold that. I'm not trading that because it's physical. There's too much cost to trading it. But again, when we're talking about a swing trade on gold, I'm looking at this area, 1850 to 1825.
What's your upside target for gold and silver?
So time frame is really important here on gold. I think within the next 6 weeks, we probably do trade back up to 2070, which was that previous high. I think by end of year, you could be looking at 24 to 2500 on gold. On silver, the big level to watch is basically back to this high here, which was the Wall Street bets pump here and the previous high. So you're looking around 30. And I think by end of year, you have a decent shot of getting back to 30 or maybe just in early 2023.
Are you still eyeing Bitcoin with the same, I guess, medium-term pessimism as you have in the last couple of quarters? I've spoken to you about this.
Yes, and thank you for making the distinction of medium term, because long term, I love Bitcoin. I love cryptocurrency. But medium term, see that this channel right here? I mean, this is a bear flag channel, and you're now hammering on the lower end of it. When you're talking about trading the range, so short, long, I mean, that's where you get into these really tight levels. But if we're talking medium term, let's talk 6-12 months out when I think Bitcoin has a good shot of bottoming out. I mean, we're talking about some major downside. I'm still in the camp that you're likely headed to 20,000 or below as an ultimate target. Again, 20,000 would be the 2017 high. I think you're seeing more and more the realization that the stock market is weakening and money's being pulled out. It's a de-risking going on, which is very, very bad for Bitcoin since Bitcoin trades off of the NASDAQ essentially with de-risking. Yeah. And you have to see this washout. I've said this from day one, going back to, our in-person interview in Dubai last October, that you have to see this full washout. You almost have 20,000 cryptocurrencies. There should only be like 20. And so you have to see this .com type flush out where a lot of these go away. And then ultimately from the dust will rise the best of breed, very Darwinian in that, and they will succeed and they will flourish, and Bitcoin will see 500,000 and we'll see $1 million. So ultimately midterms, next 6 to 12 months, 20,000 at minimum, maybe lower. But again, that is my midterm 6-12 month target.